Hey guys, what is up? How's everybody doing today? All right, I'm going to remember to share my screen, but I'm going to, in a second, but I'm going to run over to Discord really quick and tell everyone that we're here. Then I'm going to come back, and the first thing I'm going to do is hit share screen. All right, so here we go. I should have got my Discord link while I was over there, so that would have been really smart to get that at the same time. Anyway, okay, screen has been shared, and there's two of you here, so this is obviously working. All right, well, what's up with you guys? Let's check out the market. I mean, I guess you could call this typical summertime action. I mean, look at this, down 9 bips. NASDAQ down 2 bips. Bitcoin up half a percent, 50 bips. But still, Bitcoin, I mean, it's trendless since the, end of July pretty much. We've gone straight nowhere since July 25th. We did go make a new high, and then we've gone straight nowhere. Let me look at another proxy for Bitcoin. I didn't like the volume on that. Let's look at Bitcoin futures or we'll look at Bitcoin on Coinbase. Yeah, there we go. See, that has more volume and stuff. Anyway, and you can see right here the developing trading ranges. We have a trading range up here, 109.5, but then we have kind of a major trading range at 108. And that we checked into that one yesterday, just perfect. Or maybe that's today. Yeah, that was this morning at 10:30. We checked on it just to make sure it's all right. So we'll see. Bulls want to keep it in this trading range or get it, or break it out and get it into a trend. But bears want to settle it into this one and point south. So let's look at the 10-year. What is going on with the 10? Why is the 10-year doing this? What is going on? Is there problems under the surface? Let's pull up the chart underneath. And let's see. Now, this down here, it's hard to see, I know, but it's the SPY. It doesn't trade 24 hours, so it just you see. But the SPY and the 10-year have been going up at the same time, or because SPY is going sideways. The 10-year is going up. So one of them's right, one of them's wrong. Either the 10-year should turn around and come down, or the SPY ought to turn around and come down, right? One of them doesn't have to be right, and one of them doesn't have to be wrong. I should rephrase that. I'm saying likely one of them is right, and one of them is potentially wrong. Let's look last time that the 10-year blew up. Well, back here the 10-year was blowing up, and the market went up at the same time. But then eventually the market did kind of come back down for a few days. Turned out to be a great dip buy. It knocked it all the way down from 595 to 580. You can see back here, I guarantee you, this is April. You guys remember what happened in April, right? The 10-year was blowing up. Anyway, so it's just something to watch. It's 10-year blowing up, VIX going up are not generally good signs. And VIVIX is even more important than VIX. Now, the good thing about VIVIX is it gave a bullish signal a few days ago on the 25th, the same day that the rate started going up. It gave a bullish signal. Well, VIVIX has been right. VIVIX, the last time they gave a bearish signal, the market did pull back a little bit, but we'll see. But look, this is what we want is a major sustained bullish signal, and that'll set off quite a rally in the market. Right after the April lows, we had VIVIX come crashing down from 130 all the way to, normal on the VIVIX is 90. 85, 90, 100, something like that. Depends if you're in a bull market or not. I put this 90, I think, is a number that I like to look at. That's why I put that line there. Under 90 should mean clear sailing ahead. Should mean just everything's great. Between 90 and 100, between 90 and 100, watch out. And then above 100 is, generally not good. All right, so that's VIVIX, the VIX. We can look at VIX itself. It's the same thing. Now, VIX itself gave a bullish signal back on the 25th, same day. A bunch of stuff happened on the 25th, and that did set off a market rally even if you would have got in the next morning, SPY was at 601, and here we sit at 621. To be fair, though, a few days ago, the VIX did a bull cross, and if you're following this, we kind of gave a bearish signal. That's generally not good. The last time VIX gave a bearish signal was on the 12th of June, and we did have a micro pullback. But anyway, all right, so let's get on to something else. You guys are probably bored about hearing about that. We all know how VIX works. We don't look at the 10-year every day, but the 10-year, that really, those are good proxies for risk assets. The 10-year VIX or VIVIX, and what was the other one? What was the other one we looked at? VIX. Well, I guess that's it. The 10-year VIX and VIVIX. Those are good proxies. Oh, Bitcoin. Great proxy for risk assets. Let's go back and look at Bitcoin one more time. And Bitcoin's just been grinding. It's been given buy and sell signals right now. It's even hard to tell what it's on. It's anyway. So we'll see. We're just waiting for the next trend to take place. Right now, we're kind of in a holding pattern. Is it going to be an uptrend? Is it going to be a downtrend? Or do we grind here some more? It is the summertime. We might grind here some more. All right. So now let's go to the buffer report and see what's going on over in the buffer report. And the buffer report is in this window, the same window that, here we go. All right. Buffer report. See, buffer. Okay. Buffer report. SVOL, every freaking day it's up the most or down the most, but today it is down the most. Volatility is coming crashing down, and they used to short volatility. So I don't know, but then lately they've been adding leverage with using long futures in the ES. We were just looking at the ES. Those are S&P futures. But the ES is sideways. I don't know how you lose money. The ES is sideways today. I don't know. I'm not going to worry about that one right now. None of you guys even really have that or talk about that too much. Feed and 5E. Those are just ultra. It just shows you the problem there is concentration, and it works really well. Feed and 5E are up the most lots of days, but anyway, it's not working today. Let's see what is working today. Look at YSPY up a quarter point. Like to see that. Look at SDTY. That's nice. Like to see that. T-SPY. Our friend Psychotara. That's his ETF. WDTE. JEPI. Okay. ZVOL is up. SVOL is down. Let's go look at, I want to compare ZVOL to SVOL just really quick. We're just going to take a quick gander over there at ZVOL, mainly because I forgot exactly what it's on. ZVOL. There's a ZVOL, an XVOL, and an SVOL, and I get them all mixed up. I think XVOL is from Accruance Capital, and I really like that one, but that's more of a hedged equity type situation, not so much a yielding situation. We mainly look at the yielding situations on here. So here we go. So ZVOL, what's the top 10 holdings? Cash derivatives, VIX futures. They're shorting VIX futures. Oh, that's right. I remember. Okay, ZVOL and SVOL. So why has SVOL gone crazy lately? ZVOL used to be the crazy one. ZVOL was like the bad cousin, the cousin that smoking pot when he was 7 and got an arson charge when he was in 6th grade or something. That's what ZVOL used to be. Now SVOL's turned into that cousin. SVOL's turned into the bad cousin. Let's see. What I'm wondering is where's ZVOL on the max factor? Is it on the max factor? And we're going to look at that. We'll do that when we go to the max factor in a second. So hopefully my memory will last long enough. So we'll check that out in a second. But back to the buffer report. Let's see if there's anything else we're looking at. FEPI, GPTY, those are very similar. I think GPTY basically copied FEPI. Yeah, pretty much. AIPI, and it's a good thing because FEPI was a solid idea. The only thing they did wrong is they do monthly options instead of weekly options. Now, monthly options do a better job at protecting the NAV. but only because they do a worse job, or well, they do a better job at protecting the NAV. But it's mainly because they don't do as good of a job at collecting yield. So anyway, all right, let's look at, so that hurts them on the upside. AIPI, that's looking good. So which one copied AIPI? I think LFGY copied AIPI, right? And AIPI is a solid, or no, AIPI, that's AIPI. Anyway, Chippy's probably closer to AIPI. I'm building some stuff that will help us. We're going to start looking at these funds in here are really, to me, the most interesting. GPTY, ULTY, but I would include FEPI and AIPI, the ones that have 15 to 20 stocks where they aren't just so concentrated, that it's either up 5% or down 5% every day. But they can trade in and out. And, I really like, and I'm really liking SOXY. And that's a prime example of why I think the max factor is working, or it's helping me. Because before you guys would have to talk about something, oh, such and such is going crazy or something. And I'd look at something, I go, how did I miss this? When did this one go crazy? SOXY's been climbing up the top of the max factor, but it was number one today. And I already have, but I'm thinking about either SOXY or Chippy. Anyway. All right. What would you guys put it in the comments? What would you do? SOXY or Chippy? If someone stuck a gun to your head and you had to buy one or the other, SOXY or Chippy? Anyway, okay. So let's look around. What else is next? Look at YMAX is looking good. That's an interesting one as well. I just like these ones that change stocks, that I think it's more interesting when they can change underlines in and out, but all right. Let's see what else is going on. Boy, Russell looks good today. The Russell based funds. There's China. China's doing well again. Let's, I don't check in on China very much. Let's just go look at CLIP. I just want to look at CLIP really quick. Now, CLIP hasn't been on the max factor, so I don't know it's doing that well, but I have noticed it on the buffer report lately a few days. I noticed IDVO was on the max factor, and that's one we never even talk about that much. What is that one? Dividend, it's from Amplify, and it's something cash cows or something. Anyway, CLIP is, CLIP looks better than some of the other stuff. That last one we looked at today was right on the freaking bottom here. At least CLIP rallied a little bit. CLIP's up 7% for the quarter. That's not bad, and paying a 36% yield. I'd take that. I don't have any CLIP, but anyway, okay. So we're going to look at, I'm still going to remember, we're going to look at this stuff in the max factor as soon as we get done. As soon as we get done with this stuff, one thing at a time, though, right? No more skipping around. No more skipping around. Not for me. Look at USOY. Nice job, USOY. Riser is doing well. It's outperforming something right. Let's look at the Yield Max Buffer report, see what's up there. Oh, look at that. Is that Murney? You got to be kidding me, Murney. You got to be kidding me. Okay, well, let's go look at Murney real quick. Well, wouldn't that be amazing if it came back? And it will. It will if Moderna comes back. It won't come back as fast, but it can. It has the ability to come back if Moderna comes back. 145% yield, but a lot of that is you guys know it's because the price is declining. The yield's not really that good when you factor everything in. We're going to be talking about that also after we get through talking about the max factor. There was a question that came up in Discord that I want to address, and it's kind of along those lines. All right, so let's get done with what we're on and then see about the max factor and see if you guys have any questions, comments, concerns, whatever. SMCI looking good. Babo outperforming the parent asset. And of course, that's China based, and CLIP is China. So CLIP is based on KWEB, which is a Chinese ETF or a Chinese allocation of companies or whatever. I don't know that much about CLIP. What is CLIP? Is what they do with CLIP is they take KWEB, something else I don't know that much about, but KWEB I think is kind of like OARC, but maybe just for Chinese companies, or KWEB is just a Chinese index, and they're selling options on it. And evidently the options bring in a good premium because they make pretty good premium. So, all right. Look at AMD up almost as much as the parent. On the bad side, ULTY's down, and its parent asset is the Russell. That's what I've always called ULTY's parent asset. So it's fair to say that it's underperforming the parent today. The Russell's up 84 bips. It ought to be up at least that much. I could have also made the Q's ULTY's parent, but I think that Russell's a better parent for ULTY. Okay, so let's go to the max factor and see what's going on there. I might just swing by your meeting and see what you guys are talking about and make sure I'm not missing anything, or make sure I'm sharing the screen and stuff, which I am. Hey, Mark. Hey, Marcus. Hey, SB, what is going on? Don't want to discuss the Alt-D high yield. Yeah, I do want to, and thank you for reminding me. I think that's what I mentioned when I was talking about the Discord, with something in Discord. Well, and I'm also going to show you what I'm building for Alt-D. But yeah, we're going to talk Alt. In fact, we're going to talk Alt first, and we're going to go to the max factor. Mark, with the 10-year, they're anticipating. Yeah, of course. But I'm just using it as a precursor for the economy. Generally, because interest rates go up at the same time and stuff. I think I've heard somebody say the mortgages are tied to the 10-year. Okay. Anyway, I'm not a banker. I don't know, but I bet you that's what bankers do. They essentially loan you money probably 10 years at a time, or they finance it 10 years at a time and roll. And so I bet you that is why. I'm thinking that does make sense, that the mortgage payments are based on the 10-year instead of the 30-year, because bankers are slick and they're just going to they know how to do all that stuff. Anyway. All right. Bankers are maybe a little too slick sometimes. All right, so SFAL lost its fund manager. Okay, well, that's great information. That is great. I've never heard of that person either, but that's good information. Thanks, Red Sox. I appreciate it. Marcus, okay, Soxy, you'll get another. Yeah, it only pays 12%. Yeah, I know. Or yeah, Soxy, and I forgot. I think of Soxy and Chippy as the same, because they aren't. One of them's a target fund, so one should have more upside and one should have more yield. Some of the same stocks, though. Semiconductor, yeah, lots of the same stocks. All right, unless if the NAV's stable, yeah, for sure. Triple Q is better in your opinion. High volatility stocks. Okay. All right, guys. Let's look at. Here's what I've been working on all afternoon, and I'm trying to keep my mind off missing my trip, but all right. So what I've done is, at the end of every day, I can have the internet download all the Alti trades, and I've always done that. I used to download them myself, but then look what I had to do. I had to go through here and pick out the stocks. So I would select that one, then I'd go over and I'd select this one, and you have to hold down control while you're doing it. And if you double click or click off control, it'll mess up all of them and you have to start all over. Oh my God, it's so frustrating. I had to go like this. It only took about 5 minutes, but then I had to do it for LFGY, and then I had to do it for all of them. But anyway, I've had AI do it. It took all day. AI is not that smart. I mean, it's smart, but it's smart, but anyway, it took all day to do this, but I'm happy with it. So it breaks it out where I have all that right here without me doing it. All I have to do is run the script. And then from here, of course, this should be the ticker of the fund and not the ticker of, there's some little things I still have to work on, but this was a major accomplishment. But then from here, we could go like this, or I'll just have AI put one of these in also. And we're going to view a chart or insert a chart. And then we'll have that thing we've always looked at. Yeah, I mean, this isn't the way I used to do it. I used to do it in bar charts. I think bar charts are better. But in any event, I'm just going to throw that one away for right now. But you guys get the idea. So then, this morning, I just wanted to look at the Alti option positions, and here they are. Now, I wonder why this AAOI only has one. Most of them have 3 or 4. I'm thinking AI may have messed up. So I'm just telling myself I need to look into that. I know that's not going to be that interesting for you guys. But AO, yeah, gosh darn it, they messed up there. And it's probably because it's on the first line, but that's fine. So anyway, I'm still working on that. That's a work in progress. But I do want to talk about other stuff related to ULTY also. I think that's what SB was reminding me of. I mentioned in Discord that I would talk about saying, so anyway, let's look at the high yield technical analysis. And let's see what's going on here. Let's just run it real quick. Let's just run a little max factor and see what's shaking here. All right, SOXY still number one. It's 8.4 days above average, but look at QYLG. I mean, that's wonderful. That is wonderful. Where's my dividend? I wanted to look at, anyway, never mind. And look at Triple QI, man. That's, like I say, Triple QI and JEPQ are to put all your money in them. If you had to put all your money in a covered call fund, it wouldn't be smart because covered calls cap your upside, especially if you're a young person. But if somebody stuck a gun to your head, you could still get some upside with Triple QI and JEPQ. Or not some, you get more than you would probably get at the other ones. Not that you couldn't get more upside from Misty if you happen to buy it during a Mr. rally, but I'm talking about something that's repeatable year in and year out. When you're in the single stock high yield funds, that's awesome and they can do great, but there's more to it than just set it and forget. But I think Triple QI and JEPQ are set and forget. SPY goes in that category. So does GPIX. So, talk to your own planner though. Don't listen to me. But anyway, okay. So we have SPY NVDW. That's a good one. GPIX, QILD. I mean, all of these are 7 or 8 days. So you can look at all these. 7 days is 7 days. These are tied basically. They're all good. There's MSFY. That was number one for a long time last week. We can also look here to do our all-star lineup. Friday would probably be one of these two for me. Probably. Are they really weekly payers? No, that's not a weekly. SPY a weekly payer? Or no, it says no, it's not a weekly payer. So never mind. I need to look at the yeses. The first weekly payer on here. Well, this is jacked up. Because that should say yes. Anyway, I'll look at that later. I will look at that later. I just figured out what happened is because this column isn't part of the table, and so when I sorted it, it lost its references. Okay, rookie mistake. All right, so but anyway, all I wanted to talk about, or all I wanted to make a comment on, was a comment by Mark. Mark's one of my favorite people in Discord. One of the people I interact with the most. Mark and SB and BR and Scramble. Some people are in Discord that are great contributors, but just you don't talk to them as much. They're doing other stuff. But this is daily to talk to Scramble or to discuss stuff with Scramble, Mark, SB, BR, and I'm forgetting someone. Marcus, of course. Mark and Marcus. Anyway, but this was a good discussion that my guys were having. SB and Mark were trading and or were talking. So, but the gist of it, I just like to do stuff fast. But Mark's saying SB, look at the daily chart. It looks to me like 5. The gist of what Mark's saying is that the funds pay you too much when they don't make profit. I just right here, he says, if there's no profits equal no payment. That's what I was trying to get at. And, that's a question that Jay's been asked before. And that's what I always say. The reason people think when they're trading their own stocks that they don't have, the same thing happens that Jay does. The same thing happens when a person does it, but when a person takes it on the chin, they don't pay themselves or they don't have to pay themselves. So they just keep their money in the fund. So if you go through a couple of bad months, and you're a person, you go, okay, well, I'm making a little bit more and it's going to come back. Some people probably even take some of their little bit more of the income they're making and maybe even buy the dip or do something like that. But in other words, they don't, during April, you don't have to pay yourself, because if you paid yourself, in addition to the NAV, to your covered call strategies taking a hit, you, instead of being down 20% or 10%, you'd be down 40% or something. So, so a lot of people, I think that's kind of a misnomer. But as far as the funds go, I get that a lot, that we should just pay out of profits. Jay says he acts like it has something to do with the structure of an ETF, why they can't do that. And I have a hard time really accepting that. But is there another ETF that does that, though? I mean, you could say kind of that's what JEPQ does, and you could also say kind of that's what QYLD does, because they don't pay you all the money. It doesn't even have to do with not writing options on all the amount. I think they do that too, but they also will not pay you all the money. And Global X is really transparent about that. There's a chart that goes back to 2013, and they show you how much they made and how much they paid out. But here's their formula. I deconstructed it. They give you half of what they make, or 12%, whichever's least. And on their ones where they sell the full, where they do the full 20%, or the full whatever. But then on their funds where they only do a half overwrite, they pay you half of what they make, or 6%. So there's been times QYLD did not even pay 12%. In times of low vol, look back at 2018, there was times it paid 9 and 10 for a few months. But the thing is, if they have a good month, things are going great. There's some months they earn 24%. In fact, I'd say 22 is about average. Now that I have AI, I could probably test it. Back when I was looking at this, I think I hand copied them, or I did it some way to do some content on it. But yeah, so in essence, they're paying you out of profits. Now, you can't guarantee that just because it's still possible for them to lose NAV, but it's another way to do it. But yes, but if it was a trading partnership, like I've always said before, if Mark and SB and BR and Scramble and I went in together and we all kicked in $100,000 and we started slinging $1 million or $500,000 trading account or whatever, we wouldn't pay ourselves if we'd run it like a partnership. I mean, most likely if the fund had a bad month, you wouldn't get payments. But if the fund had a great month and we got 200,000 back on our $1 million, we'd probably pay ourselves all of it or half of it, and we'd make a distribution just like a business does. When you make a profit, you pay people. Yes, it is crazy that that ETFs, for whatever reason, are this way. And like I say, I really don't think any of them do it. It's not like Round Hill just pays you out of profit. It's not like any of them do it. So, and so I want to believe that, or I think Jay may have a point, but at the same time, I'm trying to fact check it. Now, here's the other thing. But no profit should equal no payment. So yeah, and that's good. You should be paying $1 when you shouldn't get $1 when you only earn 20 cents. That happens all the time. I do think the way Global X does it and JP Morgan does it essentially makes it, but they still aren't literally paying you out of profits. It makes it where you don't have that, you don't run as big of a danger. But on the other hand, with something like YieldMax, you could almost say it's always out of profits. And that's kind of the way it's designed, because when you're doing a covered call, you have a winning position and a losing position. They throw all the losing positions for tax purposes. And when they can do it in an advantageous way, it's almost like it's designed that way. I mean, don't the Round Hill funds pay 100% return to capital, and they're good funds anyway? But here's my prediction. All I was going to say is, and then here's something else Mark said, which I appreciate you guys, Mark and SB. This was good stuff to talk about. I appreciate you guys talking about this. But so, okay, Mark, yeah. So Mark said he heard somewhere that YieldMax, that's what else I want to address. He heard somewhere that YieldMax changed their strategy, and look at the chart, and they modify their strategy. So it's actually gaining a total return. So that's on ULTY. Okay. Well, we know when that was. That was October 15th, my birthday. But actually, if you can, let's check this out real quick. So back to ULTY. There's no right or wrong answer to this. I'm just giving you both sides of the story. Dividend. channel. So let's look at ULT. And I know Mark and you guys have looked at this already, but I'm doing this for the other people that are watching as well. I'm just glad I'm sharing the screen. Let's do one of the good ones, JEPQ or something. I haven't looked at that yet. We could have done triple QI. We'll do triple QI. I probably should have done a Russell high yield fund because I'm saying that the underline's basically the Russell for ALTI, but okay. So if you go back, if you go since inception, we'll do since inception first. No good, right? But and I've done every month. I've just gone, but if you go to October 15th, certainly ALTI's dogging it since then. But you can even go back to September 15th. So for whatever reason, it started doing a little better before the actual change. But you guys and people like you guys and people like me are the reason they change these funds to catch more upside, because we all gripe about how they, especially me, about how they, about how we want unlimited upside and stuff. It has helped out, but doesn't totally alleviate the problem. I'm going to give a solution though in a second. I'm not just going to. So you can see here, and triple QI is a good fund, and that makes sense, and it's beating it since September. Okay, or that's since October. All right, well that's awesome. Let's look at JEPQ. It's beating JEPQ, but let's look at just the Qs. I think it's beating just the Qs, which would mean the triple QIs are beating the Qs. No, the Qs are beating it just barely. Not with dividends reinvested, but I think that's cheating. I don't count dividends reinvested. I do that though. It's a good thing to do, but I don't want to look at that in the returns. I just want to know what the pure returns are. But anyway, yeah, you can. So ALTI definitely change your strategy. I thought I saw in the comments that somebody said that you heard a rumor YieldMax was going to change their strategy again because everyone was getting sick of the no NAV and stuff. I know I read that comment. Has anyone heard the rumor that YieldMax is doing anything new? I know about the stuff they did do. They did the spreads for YieldMax. That helped for YMAX and all those stocks. For ULTY, they did the callers. But I'm not aware of anything new, but I would be fascinated if they did something new. But I have an idea what you guys might be talking about. So, and I'm going to offer a solution. So I believe what they're doing, because I heard Jay talk about it. Gosh darn it. I'll stay over here. It's fine. I'll get you that Discord link, Red Sox. I appreciate you. Hang on a second. Okay. But what they are going to do is they're coming out with funds that are target 25, or I think it's 25 or 30, maybe. I think it's 30. I don't know. Some low number. So you could get like micro strategies with the target 25. Now that doesn't guarantee you're just going to be getting paid out of profits, because they can still, but it's going to help. It's going to help more money. If you want better NAV return, it's going to help. And that's, okay. Invite people. Sorry about that. Red Sox. We're going to copy this link right here and give it to you. But also the other thing, here's my real concern, or not a real concern, but if they let's say, hey, they changed the strategy and they're only going to pay out of profits from now on. And I've looked into that. I looked into that about a year and a half ago. It's probably one of my best videos ever. It's called True Yield. And of course I invented a metric called True Yield. And what I did is I indexed everything to JEPQ and QILD, or QILD. So I looked at what QILD does. They keep half the profits in the fund. So when I indexed everything, I said, what would the return be if you kept half the profits in the fund? And then I'm trying to think, but then I looked at something else and I just tried to make an apples to apples comparison. And I was comparing triple QI per usual. That was the one I'm really into. And I was comparing it, I was trying to put it to give it the same financial fiscal responsibility that JEPQ did. And anyway, so when I tried to back out all the NAV depletion. When I backed out all the NAV depletion, and triple QI hadn't been around a year yet, it'd been around about 6 months. it came to like 8 to 10% for AAA. And I was disappointed that it wasn't higher. I mean, I was like, damn, I thought it was going to be, I was hoping to be 12% once you backed out all the stuff, but it was 8 to 10%. IWMY was like 10 to 12. It was a little bit higher. The SPY-based one was 8 to 10. And I did Tesla also just to do a single stock one. And the Tesla one came out to 20 to 25 as a true yield. When I put them to the same, to the same level of fiscal responsibility as the other funds. So, and I think I was pretty close, because if you look at the first year performance, like I say, I was disappointed it wasn't higher. Tom from our Discord was telling me the whole time it might be 6 or 8%. He's a triple QI truther, and he talked some sense into me. He tried to talk some sense into me. It's hard to sometimes, but he got through. But then I think when I made the video probably because of Tom, because I wanted to try to, so. But when you take out all the, the NAV depletion, you're left with about 8 to 10%. Well, I think 8 to 10% is pretty good if you need a yield, but that's not what a lot of people, they want the yield and they also want to make 20 or 30%. And I don't think you can do that, because there's no such thing as free money. If you could do that, all the money in pension funds would flow into that strategy. You can't, maybe you can't do it at scale or something. So anyway, I forget where I was going with that. But I know what I was going to say. But let's look at Triple QI's first year performance. So they were born September of 23. I remember the day I heard about him. It was about 2 weeks old. I couldn't freaking believe it when I heard about it. I was like, oh my Lord. You guys don't know how happy this made me. I could not believe someone was doing this. And then after I learned about this one, then I heard about Tesla and all the other ones. I wasn't that excited about that. But if somebody has a NASDAQ strategy that they're selling synthetic covered calls on and paying you a 60% yield, like I said, and I thought at the time in my brain, I thought we would end up with 12%. So I really, but until Tom talked to me and until I ran the numbers myself, I said 8 to 10. So in the true yield. And then I didn't make a video when it came out. I should have gone back and showed what I predicted and showed what happened, but it was right on the money. I don't know. Let's just see. Or it was 23 to 24. But let's see what it was. If I remember, I think it was maybe not even 8. I think we dropped in September right before, but what do we have here? So actually, no, I was wrong. That's actually really good. We made 20%. So my true yield was actually wrong, but we didn't make anywhere close to 60%. So, and I also made a video when I first started saying, and this is based on another study, saying that if you just would keep 2/3 of it in the fund, you could pay yourself 1/3. So you look in the first year, that worked out. You could have paid yourself 1/3. To 60% is about what it paid. Made 20% total return. So you could have given yourself 1/3 of that, kept the rest of the money in the fund, and you would have had a flat NAV. So anyway, I guess I was too conservative in my video, but it depends on what kind of year it is. That still, the point is that, yes, it is true. Most of that yield's not really yield. Here's the thing though. If you only paid people out of profits, people would drop the funds. They went, I'm not saying market, it'd be good for people in here maybe, but I'm saying, but by and large, people would freak out because they're using these to live off of. They're doing, home mortgages, and they're doing credit cards and stuff, and they want the yield. I just think if you did that, it would kill yield max. And so I don't think they're ever going to do that. But yes, there should be another fund that does it maybe, but if such a great idea, why hasn't anyone come out with it yet? Maybe somebody needs to. I don't know. I'm going to talk to you guys now. That's all I had to say on that subject. All right. So, you got the thing. Okay. Yeah. Do you remember that? I remember you used to comment. You left me a couple of tough comments before, but I appreciated it. You used to call BS on some of the stuff I said, Udar, or however you pronounce your name. I'm so sorry, but yeah, you remember those. You remember those days. You and Tom would always is the voice of reason. But it's not just Tom. Also Norman Norman, I used to have two Normans. There was Norman that's in the Discord now, and there was another Norman. But I got a lot of good input from both Normans. I think the other Norman was more critical, and the Norman that's in Discord now was less critical. But still, it's fine. I mean, that's what we're here for, is to learn, and I invite that. Anyway, so I just want to make sure I catch up with you guys. What are you guys saying that? Okay. All right. So I'm trying to get where we are. That's the best alternative. Okay. Here we go. Defiance income ETFs, do they work? Okay. Well, yeah. You used to be on Udo, used to be on a bunch when I was talking about Defiance every day. So and I just hadn't seen you around a lot lately, but that's awesome. Do they work? Well, we'll let them, let's see what these guys say. But I think they do if you're all right with putting anywhere from 2/3 to 4/5 of the money, back into it or back into something. You can't, you're cannibalizing your account. Anyway, okay. So the Curve Fund Manager said once they'll hold back a bigger portion for NAV stability and pay out more during weaker trade weeks. Okay. Well, yeah. So they do that, but I'm just saying, I'm not trying to be a jerk. I just don't think anyone literally pays you out of profits, because there's months when even Curve didn't make money. No covered call strategy was making money in April, but yeah, they kept paying every week. You don't make money when that on covered call and the market drops 10% in 3 days. You might make income off the whatchamacallit, but so they all still pay you. I just think these will always pay out of gross income and not net income. It's just not the way they're designed. Okay. But let's talk. I'm going to talk about New York in a second, guys. I appreciate it. Define income. Okay. So anyway, let's see what Marcus says about that. Marcus says Curve's all right. And I agree. Curve does a great job. They don't do an index only. Yeah. The KQQQ is as close as they have to an index, but you're right. They need to do just as, I like the index ones. You got the Discord per the J interview with Marcus, nothing new except ULTY. Okay. Well, that's fine. That's fine. ULTY did a great job. I mean, that was adding the callers was huge. That was huge. Such memories. Anyway, I'm glad you remember that. I'd certainly remember you. I used to, especially when I started, I answered every question, even the bad ones. Especially the bad ones, especially the ones where somebody said I had it wrong. Because if I have it wrong, I want to know. Anyway, and you guys tell me. So, and they shouldn't be doing that. After a few years, they will realize their money's gone. Anyway, that's out of context. I don't know what I'm. Yes, yeah, correct. If you anyone that is able to do their own, because the problem is not that these funds are bad, but they have a set thing they do every week and they rinse and repeat. You don't have to do that. This is art. This is not the market's an art. It's a form of art. It's not a science. That does have scientific stuff in it, but yeah. So of course, a good trader should always beat, any ETF. Even on gross stuff, you would hope that, Tom, what's the guy's name that from the Granny Shots thing, that that he can do better personally than he can in an ETF. But I think they just took an ETF and they tried to put kind of his personal style of investing into an ETF. But because they have to file for changes months in advance and stuff, they'll never be able to be as proactive at managing their money as Mark will, or one of us will. Okay, if we go into recession, these funds stand a chance, or will they be liquidated? If NAV erosion is so high in normal times, what will happen during the recession? Yeah, well, that's a good question. During a recession, people run out of money to buy these. Yeah, Tom Lee. People run out of money to buy these, and there's other things that happen too. But yeah, if we get a recession, lots of ETFs will close down, not just the covered call ones, but there's way too many of these for sure. We don't need 197 of these introduced every week. So yes, it's like anything else. When there's a recession, lots of stuff's going to fail. Okay, Mark says it depends on the fund manager. It's true, and I think the better ones will be there. I mean, the ones that the ones that we talk about as being the more stable ones with the better strategies, and I'm hoping that even includes ULTY because of the caller strategy and stuff. And they're very proactive and stuff, and they're outperforming right now. They're outperforming the SPY, but they weren't outperforming the Qs, but they were until just a few days ago. So yeah. Tom Lee's that guy. And because of volatility decline, Jay, recent interviews is not excited about div increases or NAV increases, meaning I'm not following that. Don't expect any more high yield funds from Jay. Okay, Marcus, counter question. Are the Global X credit call ETFs still here? Oh, in a recession? Yeah, I think so. I think so because they do it right. I mean, they're in it for the long run because they're selling at the money options. Well, at the money, the problem with the at the money options is in the good times. In a recession, they ought to do better in theory than some of the other ones. Now, the guys at JP Morgan and stuff aren't stupid. If we get into recession, they'll change their strategy. So, but yeah, I'd say that QILD, selling one, if you know the market's going down, you want to sell at the money. If you know the market's going down, you want to sell in the money. I mean, because you know it's going down. Now the thing is, you never know. But the opposite to that is if you know them for sure the market's going up, you darn sure want to sell out of the money so you can at least capture the amount between the strike and the current price and the strike. The thing is, we don't know, and that's what I'm saying. These are formulas, and they aren't going to work in all times. So I think the good thing is, as investors, we have the ability to jump in and jump out. In the old days, you couldn't do that because of commissions. Well, that's no longer an issue. So, I mean, I love LFGY, but if something went to shit, I'm going to be out of LFGY so fast you can't see straight. I mean, but yeah, I think the Global X ones would weather a recession. But what I'm saying, guys, don't worry about it. We aren't in a recession now. Or talk to your planner, talk to your wife, talk to whoever you're responsible for your money with. But we aren't in a recession now. If it was me, I'd keep doing what I'm doing. But if something changes, for instance, Marcus, you'll probably just you'll up your, you'll up your YQQQ a little bit, I would guess, and that will help. And you might get out of some of the more risky things and get into something more. But yeah, so the thing is, I don't know if the funds will be here, but I know Marcus's account's going to be here, right? I know my account's going to be here, even if there's a recession. Maybe I'll have to get out of all my covered call funds. I mean, but you know what I'm saying. The other thing, that's the other reason why we shouldn't be too loaded on them. If you only have 2 to 5 to 10%, it's. Because during a recession, your growth stocks are going to get hit too. Everything's going to get hit. There's nowhere to hide. All right. So, Mark, yeah, when market drops, hit the money credit card. Yeah, it should be on a comparative basis. But like I say, when the market's going straight down, no covered call strategy, no bullish strategy is going to be great. It might be better than some other alternatives. But, okay. And Thomas is going to say, even at the money credit. Yeah, of course. That's what I think he's just echoed what I said. I'm just saying that somebody that's selling at the money is going to be better than the same guy selling 1% out of the money, because it just by that, and I know Mark and Tom understand I know you guys know what I'm saying. Sometimes I try to reiterate this for people that aren't asking questions. All right. So, let's talk about some other stuff. I'm bored of this. Oh, New York. Okay. Yeah, no, it's disappointing. I was talking to my sister today and getting upset. She called me and she goes, if it's about the money, I'll send you the money. I go, well, no, it's actually not about the money, but I appreciate it. She's really supportive of me, and I appreciate her. But I said it, I told her what happened. So I had plans to get on the train today and be there on Thursday. And I was looking so forward to that. If my ID still comes, tonight or tomorrow, I guess I could call my sister, or I could make, or I could figure it out. Also, I had a little windfall. I got something I've been waiting on, a refund. So anyway, it's not the money, it's just the stupid ID situation. So yes, retire. He's probably not even still here, but I need to text my host over at, Yield Max. Josh is the guy's name, and tell him so he can at least cancel the room and save themselves the money. But I hope they aren't too mad at me. I would have given anything to go, and I really thought, I mean, I went, it's been not last Tuesday, the Tuesday before that. Most states you can go in, you should be able to go get your ID on demand. I mean, in Oklahoma, you get it and you wait there and they hand it to you. It's still hot when it comes out of the machine because they press it together. Nowadays, they have this real ID stuff, and it has to go through an extra level of BS. It probably has to go through Homeland Security. But anyway, I went as soon as I found out it was missing. I went to the DPS, and it was, I think, 2 Tuesdays ago, or maybe even Monday, 2 weeks ago. So it's been like 16 days or whatever. They say 14 days, but I got on Reddit last night. Other people have been saying lately Texas has been running more like a month. So anyway, I'm sorry. I'm going to try to, I'm going to apologize profusely to those guys. I'll offer to pay for my room or whatever. They won't let me, but something. I feel terrible. Or they got all kinds of swag for me, I'm sure. Last year, they got me this of Jay. They probably have. I've heard they're going to have a new one this year. Jax has chewed this one up anyway. I'm going to offer to Venmo Josh money, and hopefully he'll still, and I'm sure they will, still send me my swag. And then, I can at least feel like I win or whatever. And I think I want to just go into a hole and bury my head in the sand and pretend like, I don't know, but I think, though, that's not the right thing to do. I'm going to, on Friday, when those guys are there, because I'm extremely happy for those guys that are there, there are going to be some kind of content, and I'm going to live stream it. I'll make a video where we can all watch it together if you guys want to, because it'll be fun and stuff. And so I'm going to be really supportive of the guys that are there, obviously. And I'm so disappointed. The thing I'm most disappointed about, last year, I really wanted to meet Jay and Mike, but those guys are great and stuff. And I wanted to meet Rod, and I wanted to meet Corey last year also, and Coach. But this year, there's a ton of people going. I watch their content. I like Income Architect. He has solid content. Brad is his name. I'd love to meet him. I watch Health and Wealth. He's sometimes in this room. His name's Mike, and I was so looking forward to meeting Mike. SoCal Steve. I like SoCal Steve. I like all these guys. Anyway, so I'm going to try to do something to let Yield Max know I'm still on the team, of course. And so I'm going to do a live broadcast or something. And anyway, I don't know. If you guys have any ideas, let me know. But all right. So okay, those guys are talking amongst themselves. I don't got to comment on and everything that's said. All right, guys. Well, that's all I have. That's all I have. I'm going to go back and try to keep my mind off not going to New York, but it's going to be all right. It's going to be all right. I ordered 2 IDs. You can get as many as you want. So, I have to live with my forgetfulness, but I can be more prepared. Try to alleviate it. So anyway, all right, guys. Well, thank you so much for being here. I appreciate each and every one of you guys. I'll talk to you guys later in Discord. Have a great afternoon. Thank you so much. See ya.